Making tax digital for income tax is the UK government's plan to modernise the tax system. It replaces paperwork and manual self-assessment with digital record-keeping, quarterly reporting, and one final declaration. It started with VAT in 2019 and is now being extended to income tax. Over 2.75 million landlords and self-employed individuals will be affected. Timeline. As of the time of preparing this video, MTD for income tax is being rolled out in 3 stages. April 2026, mandatory for those with qualifying income above £50,000. April 2027, threshold drops to £30,000. April 2028, threshold drops to £20,000. Qualifying income means gross income from self-employment and property before expenses. Other income, such as PAYE, savings or dividends, is excluded. Mandatory requirements. MTD for income tax self-assessment has 3 main elements. Digital record keeping. Every income and expense is recorded digitally with HMRC defined categories. Quarterly updates. Summaries of income and expenses is submitted every 3 months via MTD-compatible software. Final declaration. An annual submission replacing the current self-assessment return, due by 31st January. Records must be kept digitally for at least 6 years, but original documents like invoices and bank statements must also be retained. Who must comply and who is exempt? Those affected include sole traders, freelancers and contractors above the thresholds, property landlords with UK or foreign income, joint owners, each reporting their own share. Exemptions apply to people with income below the stated thresholds, those digitally excluded due to age, disability, remoteness or religious reasons. Certain groups, including trusts, estates, foster carers, ministers, and some international cases. Partnerships are not included until after 2028. Software requirements. MTD requires HMRC-approved software. Manual submissions and copy-paste entries are not allowed. UK property accountants software platform Rental Bucks is a great option that handles the needs of both sole traders and landlords. Penalties. HMRC is introducing a points-based penalty system for MTD for income tax self-assessment. Each missed submission earns 1 penalty point. 4 points for quarterly filers trigger a £200 fine. Further missed submissions bring more £200 fines. Penalty points expire after 2 years if the threshold isn't reached or reset once compliance is maintained. Late payment penalties are separate, with interest charged daily. After 16 days overdue, a 2% penalty applies, rising after 30 days unless a time-to-pay arrangement is agreed with HMRC. Comparison with self-assessment. The current self-assessment requires 1 annual return. MTD requires 4 quarterly submissions, 1 final declaration, digital record keeping throughout the year. How to prepare. To get ready, check if your income puts you above the thresholds. Choose HMRC-approved software. Digitize your records. Plan for quarterly submissions. In summary, MTD for income tax is a major digital shift between 2026 and 2028. Landlords and sole traders above the thresholds will need to keep records digitally, file quarterly updates, and submit a final annual declaration. By preparing early, choosing the right software, and staying compliant, you can turn this change into an opportunity for smoother tax management and more efficient business.